Insurers have hundreds of years of data that can forecast flood risk down to the address level. Let me show you how to leverage their data advantage to pick the winning property investments every single time. Most property buyers rely on things like flood maps or neighborhood data to evaluate potential investments. But there's a much more powerful resource that combines all of that information into a single telling data point: insurance quotes. Insurance companies, like those with hundreds of years of experience, have access to the most comprehensive data sets and predictive models for quantifying risk down to the specific address. They stake their entire business on accurately pricing in factors like floodplains, elevation levels, historic claims, and more. Their premium quotes reflect this in-depth risk analysis for any given property. A high quoted rate signals high risk exposures, underlying hazards, or vulnerabilities. A low rate means that a property has been analysed as a less prone to costly damages from flood, storm, and other perils. That's why I always get insurance quote when evaluating potential investment properties. It's a fast, easy way to leverage the same data set and intelligence that an insurer used to identify low risk, high potential opportunities. With just a handful of quotes, I can quickly compare rates and spot undervalued areas that other investors are overlooking. Most real estate investors don't realize that they can tap into insurer data advantage. But in this video, I'll show you my step-by-step process for using insurance intelligence to find exceptional investment properties in any market. When it comes to analyzing investment properties, having access to the right data can make or break your decisions. You can spend hours researching flood maps, historic records, or neighborhood information, but at the end of the day, that patchwork of data still leaves you with an incomplete picture of the true risk of any given property. That's where insurance companies have a major advantage. Insurance providers don't just have general data, they have massive data sets, predictive models, and industry's most comprehensive risk analysis tools. Their entire business depends on accurately pricing in potential hazards and vulnerabilities down to the hyperlocal address-specific level. They leverage proprietary claims data, government maps, elevation models, and their own historical records in that area. This gets fed into a sophisticated algorithm that can quantify risks like floodplains, storm surge, and other catastrophes. So this means insurers have the most robust, finely tuned data available for identifying low-risk properties and separating them from the true danger zone. And savvy real estate investors have realized they can tap into this valuable intelligence. By requesting insurance quotes for specific properties, you can gain access to the same risk assessment and predictive analysis that the insurance companies themselves rely on. Their premium pricing serves as a signal for synthesis of all their data into one telling number, giving you the inside edge. But just getting an insurance quote doesn't automatically tell you everything you need to know. There is an art to interpreting those quotes and understanding exactly what factors are influencing the premium costs. The first step is simply getting insurance premium quotes for any properties you're considering as an investment. You can quickly request these online or over the phone, providing a specific address. What you'll receive back is an estimated annual or monthly premium an insurer would charge to cover that property. On the surface, a high quoted premium signals that a property has been analysed as high risk based on their data models. A low premium indicates lower risk exposures. However, it is critical to look beyond the premium amount itself. Most insurers will provide details on specific factors they've assessed that go into calculating that cost. Things like distance from any flood zones or bodies of water, elevation levels, prior claims for that area, and other hazards. Studying these risk factor breakdowns for each quote gives you a more nuanced perspective on the insurer's risk evaluation for that property. It allows you to identify the particular vulnerabilities or advantages driving their pricing decisions. Of course, insurance quotes alone don't tell the full story. There are a few other key factors that go into insurers' comprehensive risk assessment that we haven't covered yet. While analysing quotes gives you a window into how insurers evaluate potential hazards, their pricing model considers a variety of other data points as well. Factors like the property's construction type, age, roof condition, proximity to fire services, crime rate in the area, and more are all pieces of the puzzle. For example, a house built in the last 10 years with modern materials and up-to-date code constructions will generally be viewed as less risky than an older home built with outdated methods. Essentially, any criteria that could contribute to the likelihood of a claim event or impact the severity of the losses gets meticulously evaluated by the insurer when calculating their price on a case-by-case basis. Now that you understand what insurers evaluate, I'll show you how to leverage that knowledge to identify low-risk investment opportunities that tend to get overlooked by other buyers. With a grasp of how insurers price premiums based on all those risk factors, you can start to read between the lines of their quotes. A surprisingly low premium quote relative to the comparable properties in the same general area could signal an undervalued gem. It might be a house that is a bit further set back from a flood zone, sitting at a higher elevation, with a newer construction and closer access to fire services. While other investors could simply dismiss it as being a bad neighborhood, the insurer's pricing tells a different story. Then again, if you get shockingly high quotes for properties that don't appear to have obvious risk factors, that could indicate those homes are located in high hazard zones that isn't as visible. The insurer's data and models are picking up on vulnerabilities that basic research might miss. This pricing intelligence allows you to identify pockets of low-risk areas within high-risk neighborhoods that other buyers are overlooking, or high-risk properties being inaccurately marketed as safe investments. While this technique can give you an edge, there are a few important nuances and limitations to be aware of when using it. First, it's important to understand that insurance models are ultimately just that, models. While staggeringly accurate, they are still mathematical approximations based on the data inputs. There could be hyperlocal risk factors or abnormalities that don't get fully accounted for. Additionally, different insurance providers may have varying models and assumptions baked into their pricing. So it's wise to get quotes from multiple reputable insurers and look for areas where their risk assessments align versus contradict each other. Another nuance is that insurance premiums can be impacted by factors beyond just the property's risk profile. An insurer's own financial situation, reinsurance costs, marketing strategies, and more can sometimes influence rates in certain areas or scenarios. So while insurance quotes provide powerful predictive signals, they should be used as one analytical tool in your overall property evaluation, not the sole determinant. Combining it with other data resources, neighborhood research, professional inspections, and investor experience intuition is key. So there you have it. A full breakdown of how to use insurance data to identify low-risk investment properties. No doubt, you can take everything I explained and immediately start leveraging insurance quotes to analyze deals in your market. If you want to learn more tips and strategies around property insurance, make sure to check out my other videos on this channel. I'm constantly breaking down ways to leverage insurance intelligence, understanding policy nuances, and protecting your investment. Hit the subscribe button so you don't miss any uploads. See you in the next one.